What's going on, guys? Welcome back to the channel. My name is Anfernee McLemore, and in this video I want to give you guys a complete beginner's guide to investing in the stock market. I'm talking about going in depth into how to set up a brokerage account, knowing what investments to pick when you're just getting started, and getting to the fun part and talking about how much money you can make in the stock market while giving you guys a live look into my portfolio. Now, contrary to popular belief, I think that 2022 may be the best year for a beginner to get started investing in the stock market. And you may think I'm crazy because everything is going down in value, but this is the time where you're going to be able to buy everything for cheap and then take advantage of that when the economy recovers. So if you think you're going to find any kind of value in this video, then hit that like button for your boy, and also go down into the description where you can sign up to the public app. And if you do that, they'll give you a free stock just for signing up. No strings attached, not depositing any money, just giving away free money. And the very first step for a very beginner getting started investing in the stock market is to decide how exactly you want to invest. Now, I'm going to try to keep things really simple, and there's basically 4 ways that you can decide to invest. And the first of those ways is the first thing that comes to your mind, and that is going to be by actually picking and choosing stocks. Now, while you may think that this may be the only way to invest in the stock market, it's probably not even the most common. So by picking and choosing stocks, you're basically picking individual companies that you want to invest in. You're picking whether you want to invest in Apple, Tesla, Amazon. You're picking these companies and buying shares of their stock as you can afford them. Now, personally, this isn't the way I invest in my portfolio, as I'll reveal later. However, I think that this may be the best way to get started investing, as it may make the most sense for a beginner. So if you are just getting into the stock market and you don't know what an index fund is or what a robo-advisor is, you can simply get started by buying companies that you're familiar with. You can buy Apple, Walmart, Target, companies that you see every day and that you probably use their services. So this way you can actually become a shareholder and start to experience some dividends and some stock appreciation, and overall start to see the highs and lows of a portfolio. But if you want to be completely hands-off but you still want to invest in the stock market, you can then decide to invest by using a robo-advisor. Now, I'm going to talk a little bit more about robo-advisors in the next step, but very briefly, it is just when a robot decides where to put your money, so that all you have to do is contribute the money to the account and the robot will distribute the funds for you. But I do want to go ahead and move into the next way that you can invest in the stock market, and that is going to be through your employer-sponsored 401k plan. Now, if you have a job, this is probably already a way that you're going to be investing, but if you don't know anything about the stock market, then you may not know that you can actually choose what you want to invest in your 401k plan. So this actually may be the best way to get started if you don't have extra money to start to open up a new account, because with your W-2 job, if you're employer-sponsored 401k plan, you probably have some money sitting in there anyway. And if you do, you can sort of play around with a small portion of that account so you can start to experience how everything works. Now, I do want to make a note that if you do have an employer-sponsored 401k plan and they offer you an employee match, the very first thing that you should do if you take anything from this video is at least contribute to the amount that your employer matches. So if your employer matches 5% of your salary, then you want to at least contribute 5%, because everything that your employer matches gives you free money, and that in itself is a 100% return without you having to do anything extra. Yes, your paycheck may be a couple dollars less, but you will be getting more money towards retirement. And the next way that you can decide to invest in the stock market would be through index funds. Now, index funds is what I want to talk about later in the video in my personal stock portfolio, but basically, to cover an overview of index funds, it is a pie of the overall economy that you can buy in little slices. So you don't have to buy the individual stocks, you can simply buy the overall pie in little slices and therefore just ride it up as it goes up. I personally like index fund styles of investing the most because it requires the least amount of work, but I'm still in control of my assets. And also, I get the benefit of knowing that if the United States continue to make money, I will continue to make money as well. And after deciding about how you want to invest, whether that be individual stocks, index funds, robo-advised funds, whatever that may be, the next step that a beginner will want to know is what type of account to open or how to open an account in the first place. And now, if you go down a rabbit hole and start looking at all of the different type of stocks account that you can open, then you may get a little bit overwhelmed by the sheer number of options that there are. So in this video, I'm going to talk about the 3 main accounts that you can open. And the first of those accounts is absolutely the most common, which is just going to be an individual brokerage account. Now, I can compare an individual brokerage account to a regular checking account to the bank. This is going to be an account that doesn't have any special privileges. It doesn't have any retirement advantages, and it isn't managed by anyone else. It's just an ordinary account that anyone can open. And this specific account may be the easiest to open because it comes with no strings attached. There's no income limits on it. The only thing you really have to be is a US citizen if you want to open one in the United States. And what an individual brokerage account is great for is for individuals who are just trying to get their feet wet with buying and selling stocks, just trying to learn how the overall process works. So if you're someone who has never bought a stock before, never experienced putting in a market buy or a limit buy or any of those foreign terms, then I would definitely recommend opening up an individual brokerage account in order to get your feet wet. And most of those stock stock apps that you see on the App Store are gonna be offering individual brokerage account to open. So that's gonna be your Robinhood, your M1 Finances, your Webull, and even your Publix, where if you sign up using the link in the description, you'll get a free stock, are gonna be individual brokerage accounts. Now, there's absolutely nothing wrong with opening up an individual brokerage account, although you don't get some of the same tax advantages that you would with a retirement account, and you don't get the assistance of a robot with a robo-advisor account. With an individual brokerage account, you are going to be able to experience firsthand the joys and the panics of buying and selling stocks. However, the next type of account that you can open is going to be a retirement account. Now, this video isn't long enough to go into all of the different types of retirement accounts that you can open, but what I want to talk about are the main two that anyone should have when they open up a retirement account. And those two retirement accounts are either a Roth IRA and a traditional IRA. And both of these IRA accounts stand for individual retirement accounts, or accounts that you as an individual open to fund for yourself, and it is not monitored by any employer. So with your Roth individual retirement account, you have a limit on how much you can put into this account per year. And the reason why there's a limit on the contributions that you can make to this type of account is because it has a major tax advantage. And the tax advantage to a Roth IRA is that any money that you put into a Roth IRA, you won't have to pay taxes on any gains that may be made in that account if you wait till you withdraw your money until you're ready to retire. So that means that if you start off with $1 and it grows to $1 million, you won't owe tax on that $999,000 plus if you leave it in till you're about 60 years old. And because this is such a powerful tax advantage, and because the government is losing out on so much tax revenue, they limit you to only $6,000 contributions per year. And I think you got to make less than $150,000 to even participate in this type of account. And this differs from a traditional IRA because with a traditional IRA, the government allows you to actually deduct the amount that you put into a traditional IRA from your current tax bill, meaning that it will actually lower the amount that you pay in taxes in the current year rather than in the year that you retire, so that you're taking advantage of tax savings today. So with a Roth IRA, you're getting those tax advantages sometime in the future, and with a traditional IRA, you're getting those tax advantages today. And you can open up a Roth IRA and a traditional IRA with companies like Fidelity, Charles Schwab, TD Ameritrade, and also companies like M1 Finance as well. But then the next type of account that you can open is called a robo-advisor account. And this type of account is where it has a system where it automatically deducts money from your bank account to contribute to your investments, and then it automatically invests and rebalances your portfolio given what's going on in the market. So a robo-advisor account is probably going to be the most passive form of investing that you can possibly make, because you literally have to put no thought into it. The robo-advisor has its own algorithm, and it has its own methods in investing money in order to potentially give you the best possible return for any given scenario that it may read. And I think one of the downsides to having a robo-advisor account is that you really don't get that authentic feeling of buying and selling different securities because something else is doing it for you. But if you want to be completely hands-off, then the Acorns app is a great way to get started with robo-advisor investing, because it automatically rounds up your purchases and invests the difference, and then it rebalances your portfolio whenever it gets out of whack. So by keeping these three types of investment accounts in mind, you should be able to get a feel of which one you're leaning towards in terms of opening one for yourself. And then the next step will be to begin to set a budget for how much you want to contribute to your investment account. Now, as a beginner, you may be a little bit cautious about putting a lot of money in there, but what is great about investing in the stock market is that you can start with as little as $1 by buying fractional shares. So by buying fractional shares, you don't have to buy a whole share of Apple, you don't have to buy a whole share of Amazon. You can buy little slices of the companies or of the index funds in $1 to $2 increments. So if you think you only want to start with $5 just to get the ball rolling and to understand investing, then that is completely okay. What is important to do here is set your budget at an amount that you can contribute consistently and that you won't be tempted to lower if you need extra money. You can start off with $10 a week if you want to, and just contribute that to any account that you want to until you get more comfortable and start contributing $100 a week, and even as much as you want once you know what exactly you're doing. And after setting your budget for investing, what you want to do next is set your expectations for how much money that you think you're going to make in the stock market. Now, contrary to popular belief, it is extremely hard to turn $1 into $1 million in the stock market. I know with the whole cryptocurrency craze, it may seem like it's an easy thing to you, but if you go into stock market investing thinking that you'll make a 1,000,000% return and become a millionaire just like winning the lottery, you will find yourself quickly disappointed and discouraged from investing in general. So set your expectations of what you think you will make in the stock market. And typically, if you are an index fund investor, as I talked about, you're going to make about 7 to 8% on average on your money any given year. Now, this doesn't have to mean that it has to go up exactly 7 to 8% each year, because one year your portfolio may be up 20% and the next year may be down 10%. However, the average collective return of your portfolio should average around 7 to 8% if it performs in the future the same as it has historically. So by setting your expectations, you will then be more level-headed if the market takes a dip. You won't be as panicked if you see red in your portfolio, because hopefully you will understand what goes down must come up, and you'll know what goes up must eventually come down. So by having a clear expectation in the stock market, you will keep your your emotions in check and therefore sleep a lot better at night, knowing that you don't have to stress over your portfolio. But now let's talk about actually maintaining and managing your portfolio. And to do that, as promised, I'm going to take you guys into my Fidelity portfolio, which I hold 90% of my investment capital. So in this portfolio, it is currently valued at almost $31,000. And you can see I have a bunch of the accounts that I talked about in this video. I have an individual brokerage account, I have some Roth IRAs, and even some rollover and custodial accounts, and it also holds my 401k from my W-2 job. But if we look at the biggest of these accounts, which is my Roth IRA, we can see exactly what I invest in. And in this investment accounts, I only hold 3 index funds. The first of those index funds is FSKAX, which is a total United States stock market index fund. And basically what it does is it tracks all of the public companies in the United States and wraps it up into one index fund that you can buy for little slices. So in this specific index fund, I have about $8,000 into it. And the next index fund I have is FSRNX, which is a Fidelity real estate index fund. And that index fund has about $1,300 in it, and it tracks the overall real estate economy in the United States. Third and last index fund that I have is FTIHX, which has about $3,500, and that is the total international index fund, which excludes the United States stock market. So basically I have almost the whole world in this portfolio with only 3 index funds. And when you're talking about managing portfolios, I am a big fan of not ever selling. Once you buy, you buy in whole and never sell. That is my investing strategy. So my current investment allocations are 67% towards the United States index fund, 23% towards the international, and 10% towards the real estate fund. And what I do if these percentages ever get out of whack is when I actually put more money into the portfolio, I put more money into the areas that are underbalanced and I put less into the areas that are overweighted. So in this way, if I keep contributing money, the portfolio will stay in balance and I'll never ever have to sell my assets, because my goal in this portfolio is to keep it as long as possible and to potentially never ever sell it. I want to live off the dividends and the gains from it, but if I can avoid it, I never want to sell my actual stocks. That way I can leave a generational wealth for my children. But with all that being said, I really hope you enjoyed this video, and I really hope this video sheds some light on how a complete beginner can get started investing in the stock market. Investing doesn't have to be a scary thing to do, and it's definitely not just a hobby for rich people. You can start investing today with as little as $1. So if you did find value in this video, then hit the like button for your boy. If you want to see more content like this, then hit that subscribe button as well. And also don't forget to go down into the description to claim your free stock by signing up to the public app. And if you do, you'll be supporting the channel as well. However, I hope you like this video, and I'll see you in the next one, guys.